Okay.
Hello, good
So,
evening. This is Dr. Ravi Kolli from Pittsburgh. Welcome again to yet another financial webinar offered by AAPI and sponsored by Wall Street Alliance and our good friend Syed, Nishat. And today we are going to talk about tariffs and Wall Street and investment outlooks. AAPI's goal is to educate its member on the importance of financial planning and becoming financially independent. After all the long years of education and training and hard work we do, we do need some financial stability and fruits of our labor at the end of our career. So these kind of financial planning webinars are so important for our career and our peace of mind and our financial success. The attendees should always consult their own advisors and both financial and legal attorneys for any further advice. This educational event was to be hosted by Dr. Sateesh Kathula, our esteemed president of AAPI, and who is away on international travel for AAPI-related event. So I'm covering for him as a standby today. I have hosted a few webinars during my year of presidency, a year before last year, with our good friend Syed, who has been a great ally and asset for AAPI. Syed is a certified financial planner and is a certified plan fiduciary advisor. His articles and interviews have been published in various medical and financial journals. These include articles on interviews on asset protection, common financial mistakes by physicians, and were published in MedPage Today, Medscape. He's also regularly quoted and interviewed in media outlets like Forbes, Kevin MD, US News, Investment News, and Yahoo Finance. This is a very short webinar because I believe you will have a lot of questions. We'll try to gather all those questions and put it forth to Syed for his take on them. Because of the current market volatility due to the tariff situation and how we should allocate our investment and what our time horizon of investment should be. And we'll not obviously discuss any individual stocks and buying and selling or any other such recommendation. You should be consulting your financial advisor because everyone's situation is unique and different. So these kind of webinars are not the right forum for giving personal financial advice. So we would like to make it more audience interactive, not a long, boring presentation. I'll ask questions to Nishat, and he will answer. And you can also ask questions as well as in the chat box. Again, please ask your questions in the chat box, and we'll try to gather all of those questions and present it to Syed. And Syed also will be checking the chat box and question answer tab. All right, let's start, Nishat. Like Jamie Dimon was saying, we're not in Kansas anymore, right?
yes.
it's not. It's not a predictable flat land anymore. We're more like
Yeah.
in Pittsburgh. It's all hills and mountains and
Yeah.
valleys, ups and downs and jigs and jags. No straight lines here. So let's talk about tariffs and your outlook on that and your take on that. Can you explain
Sure.
what tariff is, Syed?
Yeah. Thank you, Dr. Kohli. And actually, Dr. Kathula was in Japan, I think, and he
Correct, correct.
called and he's
So
saying that
he
in
knows
short
the
notice.
market a little bit ahead of us.
Yeah. And he called. He said that, you know what, can you do something for the API? So thank you very much for inviting again. Really appreciate it. But again, this is an educational webinar for the API, members, and they should consult their own financial advisor. The whole purpose is how, like you said, do it yourself without financial advisor. So that's why I'm here to give educational talk, and hopefully you can learn from it. The talk. So now the question is that what is tariff? Number one question, and what's the significance for it? So Dr. Kohli, tariff is not something new. It's going on for almost 1800 centuries.
Mhm.
You'll be surprised. It's not something new. It's going on, and in a simple way, what is a tariff? It is a tax paid by the consumer. So whenever U.S. actually import goods, they actually charge something called a tax or tariffs to the goods that's coming in. And what happened that companies have two options. They can absorb the cost or they can give it to the consumer. But most companies have fiduciary responsibility And usually what happened, they just added the product cost to the consumer, and that's basically is called consumer tax or is extra tax to the customer. A simple way to say it. Now,
Mhm.
both arguments can be made. Um, Positive argument for tariffs are if you have tariffs in place, if it's higher, companies understand that overseas costs are more expensive. They should stay in America. They should stay here, build factories, and that actually can create jobs. And the advantage of the cost of production will be lower is because there's no tariff in within the country. So that's the positive thing is having imposed government do tariffs, so not everything goes overseas. Job stays within the country. That's the positive thing. Negative things about tariff is that it may not be possible to produce the same goods in the same country. And it may not be possible to have the same output like you can do it foreign, and the production of a product or a commodity might be very expensive and inflation may pick up. So that's why the free trade or negotiated trade agreements came in between different countries. So tariffs are very common. Each countries have it to make sure there's a checks and balances in the economy. So just to give you a nutshell, this is what the tariff is. Hopefully it makes sense.
Sure. So why this tariff issues are now in front of us, and what is the significance? How is it going to affect bringing jobs back, and also about negotiations, in your opinion?
Yeah, so before talking about why, sorry, because as I told you, it was there for a while. So
Hmm.
why this tariff is a big issue. But before that, I just want to have one disclaimer to everyone. In this, I need to talk about the economy a little bit and agenda
Hmm.
for the new government. The problem that
Hmm.
Kohli, as soon as I open my mouth about the new government, people become emotionally about politics. So
Hmm.
please stay the politics out of the way. Let's just look as a point of view of economy, and that's the end of it. Is because people emotion runs very high, and as soon as I talk about something good about the policies, they say, "Hey, another Wall Street guy talk about a Republican." So I would highly say, don't let's not get into that. Let me just talk about the agenda, and that's it. So if you take a look at the chart, what happened that in America, ballpark, like imagine I see a nice background in your house. You have a good house, looks like, and you spend money. Imagine this is America, and you to run this house, there's a cost, and the cost, imagine America is about close to 6 trillion. That's what America spends money to run this country. But you are a physician. Imagine this way, America also earn income. How does they earn income? Through paying taxes like you, sales tax, W-2 tax, and everything. The revenue America brings in is about 4 trillion ballpark every year. So they spend about 6 trillion, they bring home about 4 trillion. So what happened? The 2 trillion is the deficit every year we're having.
Hmm.
So to cover the deficit, they print money or they borrow it. So what is the total deficit so far? So total deficit throughout the last 10 years have accumulated around close to $36 trillion. If another 2 trillion happen, which is we look at the chart, another 2 trillion happen, we are looking about 2 trillion added to the GDP. So added to the debt. We're talking
Right.
about 38 trillion, 40 trillion, and there was a projection by 2030 or 2036, it will be 50 trillion. We're talking about the huge debt this country had it. So to lower it, what the government come up with a plan is mainly first thing, I mean, I don't know, you heard about the State of Union. Trump spoke about like Dodge, Social
Hmm.
Security, Elon Musk, and everything. If they can cut those expenses, that's about 1 trillion. So remember, 2 trillion is the deficit. 1 trillion comes from this Dodge, everything they talked about. This tariff we're talking about, tariffing other country, uh, the revenue projection is about close to 500 billion to 800 billion target. So that goes one trillion and then 500 billion. You must have heard about this Trump gold card, right? 5 million
Hmm.
if you invest in this country, you Trump gold card, which is citizenship. The target from that one is 500 billion to 1 trillion also. So this is the three phase the economics Trump talked about. If you add it together, so this is how the agenda is to tackle the true $1 trillion budget deficit we have it every year. once this is done, we most likely will have a surplus every year. And the goal was to cut the taxes. So, but the problem is that whenever we are giving tariffs, other countries basically is retaliating. It's not that simple because what happened that there's no way tariff will bring $2 trillion, the deficit we're having. You have to do something more than that. And so the people are saying it that if you tariff, other countries want to negotiate, but the bigger issue is that China, they don't want to negotiate at all. They are saying over here that they're, if you see it today, Trump pretty much like tariffs kind of postponed it a new tariff, but except China, the reason was the issue is happening. China is not negotiating, and that's one of the reasons why you see this a negotiation back and forth happening. But the
Mhm.
problem, Dr. Kohli, is this economic war after physical war is the biggest thing, the biggest problem a country can fight. And it can
Right.
linger for a long time and it can get into a nasty recession. So that's why the tariffs coming into play because it is almost an economic war the US about to face for the next 3 months. So that's why you see all this volatility.
Correct. Yeah, Warren Buffett said that tariffs and trade, it's like a trade war, pretty
It
much.
is.
Like in most wars, nobody really wins, in my opinion, but I'm not an expert. But sometimes you are winners, there are winners and losers, and they do make a difference. So,
Correct.
coming back to some questions and concerns we have. So, what are the tariffs for each country? There is some, you touched it a little bit, 10% for each country and extra more for China right now, but everything is on a pause except China tariffs. So, how does it affect us? Is the tariffs good for the economy in your estimation or our experts' estimation?
Yeah, if you take a look at the numbers is keep changing. There's
Mhm,
a tariff, then the reciprocal tariff, but so far, as of right now, tariff is 10% across the board.
mhm,
And but the problem is with China, looks like if they retaliate, the tariff goes to 105, and after today 125 is keep changing. So the problem, Dr. Kohli, is not the tariff because, in my opinion, I'm just talking about 85% of countries have more favorable tax rate. Like, for example, if you have European goods in America, we pay only like 3% taxes they pay. But I'm just talking about if our US car go to Europe, I mean, the tax is almost 10% if you take a look. So the statistic has been that 85% of the country has favorable tariff than US. So I think
mhm,
some negotiation must be done. But the problem, Dr. Kohli, the way it has been done. Yeah, so there's a joke I think in CNBC I saw it. It's called I think it's Hard and McDonald and Island. There's a lot of penguin. Trump taxes 10% in that as well. So it's like what's going on, the way you're handling it, and looks like it is not just China across the ally. Seems like the current administration doesn't care. So if you have an
yeah,
attitude like this, that really, really, uh, you know, uh, you know, shake the whole market up, and that's what's happening. Now, if you're asking me whether we're going to win the war, whether it's going to be negotiated. So if you take a look, Dr. Kohli, that
mhm,
US import almost $3 trillion goods every year.
mhm,
We're the largest importer, if you even larger than China. And US, we spend a lot, like my mother-in-law. My mother-in-law, big spender, and US is a big spender. 70% of our GDP comes from consumer spending. And you'll be surprised as a financial advisor, I see 60% of American, more than 60%, they live paycheck to paycheck, to be honest with you. So we don't
yeah,
save. We keep spend after spend. So I think that there is no other country will be able to fight with us with US because of the we are the largest. But China has a trade surplus. We have a deficit actually. We import more than export. So I think US has a lot of negotiation power. Like Fed can cut the rate tremendously, print money. In my opinion, this is a good time to negotiate. But my main concern, the way the negotiation has been done, that in my opinion, it can bring the market down quite substantially.
okay. So now, what are the chance of recession, and what is the worst case scenario or the best case scenario in this situation for the economy in your estimation?
Yeah. So basically, the people ask the question, the worst case scenario and best case scenario. So worst case scenario, what will happen that this war goes, this economy war, this tariff war goes on for months, no negotiation whatsoever, retaliation after retaliation. Like for example, Bill Ackman, if you read the interview today, he was doing he was investing into startup coffee because what happened, Dunkin' Donuts, Starbucks, they have coffee in reserve. But I'm thinking if you have a
Mhm.
startup company, try to import something because remember the tariff, some tariff is still going on as of today, this Wednesday. So the
Mhm.
cost is the small business are getting hit by that, and they cannot last like this. And you must have heard, I'm a background, I'm from Dhaka, you're from India. The price of sugar, onion goes up 30% in one day. This thing may
Mhm.
happen, and so that's called a nasty inflation. Fed may not be able to cut the rate that Trump is talking about, and we're talking about a 3 years bad recession. That's the worst case scenario. Best case scenario will be like today. Like today, if you see
Mhm.
the market rallied up almost 2,000 point because looks like Trump is taking a pause. Some countries are coming on the table, like for example, um, Taiwan said that they will negotiate with the country. Europe is talking about negotiating with the country. If Japan comes in, then I think China will come into play as well. The negotiation will be done very quickly. In my opinion, that's the best case scenario. I don't think that the administration want to break the whole economy. And I think the market will recover very quickly. In my opinion, this is a short-term pullback. Just like COVID, when people saw vaccine coming, market went up. In my opinion, as soon as the negotiation comes in, and I think what will happen until election year, next year, I'm talking about midterm election. Before that, Fed will cut the rate. I think it's going to be a short-term recession, and the market will rally up very quickly, in my opinion.
Okay. All right. So what about we are hearing about market will crash, and why not sell everything and let things stabilize and then get back in? What do you think about that mindset? Should we kind of bail out, or should we go into a buying spree of stocks? What is your thought? What are your thoughts?
Yeah, so one recommendation, I have it like sell everything. And, and this has happened, trust me, yesterday. I was, as a financial advisor, I'm doing it for almost 17 years. I've been
Mhm.
keep telling clients when a volatility like this happen, before the market crash, whatever you had a goal. When you invest, Dr. Kolli, your retirement, you're investing the money, you must have had a goal before you invest the money. Stick with it. Just because the market is down and in front of you, don't sell everything. Because there's a statistic done that since 2001 until 2020, the average stock market return is almost in the vicinity about 8% per year. If you look at look at the chart. But if you
Mhm.
missed the best trading days, let's say you may missed about 10 trading days, best 10
Mhm.
trading days, your return instead of 8% become only 3%.
Mhm.
If you miss the 20 base trading days, like today, your return becomes 0.01%. And if you miss 30 days, your return becomes negative 1.51%. So you do not know what is the best trading date. And if you take a look at the statistic, previously, I think that post dot-com bubble, the S&P went up almost 25%. 90s recession happened, the following 5 years market went up 70%. 80s recession, next 5 years market went up 88%. So at the bottom, selling, I think is a big mistake. My suggestion will be as long as you're diversified, you don't need the money, stay in the course, wait for the market to normalize it. At that time,
Mhm.
yeah. So if you get panicked, Dr. Kohli, when the market drop, that means you're not a good fit for the stock market anyway. So what happened?
Mhm.
Market recovers, sit down with the financial advisor and try to reshuffle the portfolio at that time. Panic selling never works.
Correct. Yeah. Yeah, I understand. What about the S&P was down last 3 days. Now it came back up a little bit. So it could be down another 20%, or what is the scenario? What is the outlook?
Yeah. So what happened?
Mhm.
If you take a look, Dr. Kohli, the year to date, the S&P as of yesterday, not today, Today, S&P is down year to date about 6. So as of
Mhm.
yesterday, S&P was down about 15%. But if you
Mhm.
take a look at the world index, they were only down. Like, for example, if you buy IXUX or international stock, they were only down 2%. Bond was
Mhm.
up 2%. Gold were up 12% year to date. So what I'm trying to explain that S&P fell 15% as of yesterday. But if you're diversified, like if you bought some international, if you bought some gold and bond, you would not be down so much. Now, the
Right.
problem, Dr. Kohli, I see it, especially with API members. I mean, and that's what the webinar we are doing. S&P fell 15%, but I see as of yesterday, their portfolio fell 25, 30%. You know why? And I think in last webinar with Dr. Kathula, I spoke about it. They buy only this Magnificent Seven. That's the
Mhm.
problem. A lot of
Right.
physician, API doctors, they buy
Right.
Tesla, Nvidia, Alphabet, Apple, Amazon, Meta, Microsoft. This is all they buy.
Mhm.
Plus, they buy S&P 500. So, but remember, if you look at the chart in my screen, that Apple, Nvidia, Microsoft, Amazon, Google, Tesla, Meta, last year S&P went up almost about close to the range of 25%. 63% gain came from these seven stock. So take out this seven stock, you will see the return is not too much. This year, S&P fell 15%. I think more than 50% affected by these stock because what happened, this Magnificent Seven, as of yesterday, fell 23%. So that's why API members or some physician I see, they
Right.
are down a lot because all they have this tech company plus they have SPY, and SPY is very heavily into this Magnificent Seven.
Right.
So
Right.
my recommendation will be that that now the market is up. Today the market is up. Let it go up a little bit. If you have this concentrated position, don't have concentrated position. If you have a lot of Nvidia, my suggestion will be start trimming it a little bit and try to get into the other sector. Don't be concentrated because that is the killer. That brings your
Mhm.
portfolio down a lot and it never goes back up.
Right. I think that was the question that everybody has in on mind. I have a concentrated position in Nvidia. Should I sell it? What should I do in this market? And you answered that. So, what about, is this a good time to buy? And some of my daring, risk-taking friends are buying stocks. And what should I buy? Not only the risk of buying, the courage to buy. What should you buy? Is a
Yeah,
question a lot of people are asking.
Yeah, the question is that is it a good time to buy? I think the way to see it, number one, number one question is that how far are you from retirement? That's the number one
Hmm.
question. Okay, so if you are less than 5 years away from retirement, 3 to 5 years away from retirement, to be honest with you, you should not invest too much into the stock market because anytime you, so Dr. Kohli, what kind of investor are you? You invest for 1 year. Is there an investment like this? There's no investment like this. Is there investment for 6 months? No investment like this. Like I was talking to a client of mine, he's saying that I had cash in the bank, I wanted to buy a house, but not for 2 years, I put it into the market. That's a
Right.
complete disaster. So
Right.
if you're investing in the market, at least five years time horizon.
Right.
So if your time horizon is less than 5 years, what happened? You should not buy too much stock. You should be around 50% conservative. There's a chart in front of you, 50% conservative and 50% aggressive. If you're less than
Mhm.
5 years of retirement. Now, how much net worth should you have it during retirement? A lot of people ask the question. In
Mhm.
America, to have a comfortable life, you need to have 6 million net worth. If you have less than 6 million net worth, what I was saying that you should not be taking too much risk in the market. Why 6 million came into play? 4% of 6 million at the age of 66, you can withdraw every year. So 4% of 6 million, that becomes $240,000. You withdraw every year, plus Social Security kick in, which is 60,000. That's $300,000 income every year. You have to pay taxes. Net, you make about 240,000. That is a simple math. So this is how much you need. So if your net worth is more than 6 million, then what you should do, you can buy some stocks, any portion more than that, and have a growth portfolio into this account. And then you can get into moderate, you can get into growth because you don't need this money. You can be 70-30, you can be 80-20. But again, my suggestion will be rule of thumb, if your net worth below 6 million, Close to retirement, be 50-50. Net worth more than 6 million. What happened? Anything more than 6 million, you can invest into the stock market, have an aggressive portfolio, and don't look at the market too much. Buy SPY, buy index funds, and leave it there for long term. And in 10 years, the market will double. So, to answer your question, Dr. Kohli, is it a good time to buy? If you're sitting a lot of cash, it's a good time to buy. And if you have a 10-year time horizon. But
Mm.
if you're close to retirement, like less than 2 years, less than 3 years, you should not be into the market to begin with. You should be into some sort of fixed income bond funds where they're giving you consistently 4 to 5% return. Hopefully, it makes sense.
Yeah, that make a lot of sense. How much cash you have and how much time you have determines where you are and what you want to do with that situation. And also, some people were asking me, as a friend, between in our friendly discussions, even if you're 65, you're still really investing for another 20 years
Hmm.
of spending. So your parts of your investment should address that long-term rate of return, not to put everything in a like a cash-like equivalents as well. That's where the 50-50 portfolio, I guess, comes in.
Yes, this
So,
is where the 50-50 comes into play. Absolutely, you're right.
right. So what
Correct.
should my investment allocation? You already addressed it. What sector should I invest in? That is another common question you come across. People now going to sectors and how to rotate sectors. What is your take on that?
Yeah, so my suggestion in this market, each year is different. Try to get out of heavy concentration of Magnificent Seven. Again, my message is very consistent that don't be concentrated, don't be heavy tech. If it's possible, a good portion of your money, 10%, try to get into financial because the current administration has spoke about deregulation is coming.
Mhm.
And then during deregulation happen, a lot of transaction happen, small business thrive, loan will be easier. Financial sector should go high, like ETF like XLV will do well. Try to get into utility sector a little bit, about 5% of your portfolio in utility, because what happened that because of AI boom, people do need a lot of electricity, and I think utility sector will do very well. So try to buy utilities like XLU, Eaton, Con Edison, because Con people always need to use electricity. It's a good time also to buy some gold because what happened that gold sector tends to do well if there's a market volatility and it give you hedge in the market. And try to buy some bond as well. Dr. Kohli, I think people are making a mistake because the Fed will cut the rate at least 2 times the projection this year. Money market, the free interest rate you're getting, you're not going to get that too long. So I think it's a good time to buy a midterm bond or long-term bond because the bond tends to go higher when the interest rate drop. And also a good portion, 10 to 15% of your portfolio, try to get into international sector like IXUS because Dr. Kohli, you heard about DeepSeek, right?
Yeah,
This
yeah.
yeah. So what
Chinese
happened
AI.
that
Yeah.
exactly. So the Chinese AI, so what happened that they were able to have this Chinese AI much using the much less costlier chip. So I think international market has room to go much higher compared to, and that's why that the Magnificent Seven, Dr. Kohli, was down before the tariff announced this year. People
Right.
are because it's overbought and they are getting into international market. So a lot of physicians hate international market. I think it's a big mistake. I think the international market is a low valuation in the next 10 years. I think Dr. Kohli, you must have heard that a lot of international countries are becoming slowly less dependent on American currency. They want to
Mhm.
do of their independency. They want to their own thing. Like India, they're becoming self-efficient. China becoming self-efficient. I think the individualism is coming into play. All physician, I do recommend read Ray Dalio's book. It's called
Mhm.
Perspective. Read the book. It's a very good book. They talked about how international perspective is changing. US is not going to be the dominance anymore. Try to buy some international if you can, 10 to 15% like IXUX. That should give you a good buffer in the portfolio. Don't be concentrated. Buy financial, utility, gold, bond, and international, and that will give you a spread that you need so you can go to the market. Volatility will be here for at least 3 to 6 months.
Yeah, I think I feel the same way about international stock market because there's so much ambiguity about trade and tariffs. There
Yeah,
was a lot of investment flowing into US from international investors. They might
yeah,
take a pause and they might invest in their own countries, so that to prop up their own economy. So I think there will be a lot of reshuffling and reallocation going to happen in the international market.
correct.
Uh, so, what are the mistakes you would recommend how to avoid those mistakes in this market? I think you touched upon panic selling, asset allocation, time for horizon of your investment, but expand a little bit or give more
Yeah,
nuanced
couple
and
of
yeah.
yeah, couple of will say that a lot of physicians use something called margin. Please
Uh-huh.
don't use margin if it's possible, because what happened that margin is a kiss of death, we call it. Because what
Mhm.
happened that each broker or house you invest with, custodian, they have a margin requirement, equity requirement. So like, and physicians use margin and buy concentrated position. So don't use margin, because you'll get margin call and you'll be forced to sell. That's number one. Number
Mhm.
two, as I mentioned, don't do concentrated position. Everything is to Nvidia, everything into Tesla. Please don't do that. Try to diversify. And number three, as I told before, time the market. Like I yesterday, I got a email from a client, bold email: sell everything when the market drops this level. Insanity.
Yeah.
So try not to do that. And the market today went up like 10% in one day. So again, a lot of people sold it. Now what's going to happen? Fools rush in. They will, oh, I'm going to miss out. I'm going to miss out. Now they're going to buy 10% higher. So trying to
Right.
time the market, stay in the course, but make sure you diversify properly. I know it's a old school boring thing I said, but this is the truth.
Right. Right. Yeah, when the market going up, everybody looks like a genius and
Yeah,
everybody is a smart guy. But when it is down, that's when the discipline needs, and that's why actually the managers are good for people like us who want to do this panic selling and uh, pressing the button at the wrong time at the wrong for the wrong reason. So at least
correct.
you have somebody else to talk to and kind of sit back again. So anyway,
Correct.
so, what do you think about buying annuities and life insurance as an investment in this market? Actually, I was also looking at it and I was researching on IULs and all that. Everybody trashes them. What's your take on them?
Yeah, so what happened that when the markets sell, we get a lot of calls from insurance companies that listen, take a look at your portfolio down. If you had a bought annuity, you would have been protected. Again, I
Mhm.
highly recommend not to do this. Obviously,
Mhm.
I understand that there could be case can be made, but annuity have a high fee. Insurance company has a high fee unless you really need it. My suggestion is always go with low cost index like SPY or VOO or QQQ, IXUX, VUG, SPY, this kind of stuff, and leave it there for long term. Buy BND, buy Muni, just to give an examples. You can
Mhm.
buy indexes like this, index funds, and leave it there. I'm telling you, anytime you buy anything beside index funds, there's a cost associated with it, and financial advisor makes the biggest amount of money there. An
Right.
insurance company charge very high fee, so they're selling this whole fearmonger thing. So my suggestion is that why get into all of this? In the long run, market goes up. There's no way to
Mhm.
guarantee any of this, but historically, market always goes high. If it's possible, stay the course. Buy traditional, what Warren Buffett says, buy index fund and forget about it for long term, and do something called dollar cost average.
Mhm.
That's the most important thing.
Yeah. And what about alternative investment like gold? You already mentioned a little bit. You want to talk a little bit further? You want to invest in the real, like a gold or like a gold stocks, gold funds? What do you want to recommend?
Yeah, so there's some alternative investment. I think there's a room there. So if you're really looking to diversify, try to look at BlackRock, those funds, some like Chase company or our company. If you want to use our service, we have alternatives. So they give a decent downside protection if the market becomes volatile. alternatives comes with their own challenge, like liquidity issue, credit issue, purchasing power issue. But usually, this alternative investments does give you the hedge. Usually, there are different type of alternative investments. Like, for example, that's a credit swap. There's a REIT alternative investments out there. Sometimes the alternative investment for arts. So
Hmm.
speak to your advisor. A portion of it, up to maybe 5%. It may not be a bad idea to have an alternative investment which is not correlated with the stock market.
Right. Some non-correlated assets like
Correct.
that you're talking about. Okay, good. All right, let's summarize. We have some questions. Why don't we go through some of these questions? And okay, when can you start withdrawing from IRA or Roth IRA without penalty? You want to take that?
Yes. Yeah, so Roth IRA, after the age of 59 and a half, there's no taxes and there's no penalty after 59 and a half. But, there's some rules out there for Roth IRA that after 5 years, for, few reasons, you can also take it out. And similar to IRA account as well, after 59, you can take it out, but then you have to pay taxes, but no
Mhm.
penalty.
Right, right. So penalty is different from taxes, right? That's what you need to
Correct, correct,
probably clarify with
correct.
them. With the 10% penalty for any early withdrawal, but taxes
Mm,
are due on all IRA withdrawals, but not on the Roth IRA withdrawals,
correct,
right?
correct.
Okay. And does the stock market fluctuation in one's personal portfolio get diminished by investing in direct indexing? I think
No, it's
that's
not.
what.
Yeah, it's not diminished
Mhm,
by direct indexing. What I was saying that it doesn't fluctuate too much
mhm,
compared to you buy individual stock. That's all I'm saying. Like if
right,
you buy index like SPY, I'm just talking about year to date, even after market recovery today is down how much? 6%. But
right,
how much is Nvidia down or Tesla down? They are down much. Still, they are down 20%.
right.
Tesla is still down a lot. So
Mhm.
individual stock tend to go down a lot. And like I'm doing it for 18 years, 20 years. I don't know if I can buy good stock consistently and beat the market. I mean, if I can beat the market buying good stock, I would not be doing webinar with API tonight at 8 p.m. I'll be a billionaire right now. So no one can beat the market consistently. So that's why buy and hold index fund tend to be a proven method to make money.
Okay, next question is what do you suggest for retirees, which is a
Yeah.
big part of our RP audience now?
Yeah, so retirees again, my suggestion would be I'm hopefully either through a financial advisor or yourself, you have a diversified portfolio. What I mean by that, let's say if you have index portfolio, you have some SPY, you have some QQQ, you have some BND or Vanguard Intermediate Bond, you have some gold, you have some international. Close to retiree, my suggestion stay 50-50. 50%
Right,
aggressive because you will not be able to beat the inflation if you're 100% cash. 50% stock market is okay because you will have RMD, required minimum distribution, at the age of 73 or after 59 whenever you need the money. But the 50% conservative should be able to help you to pay your bills. And as the market goes down, try to shuffle the portfolio. So what I mean by that, the market drops, what happened that your bond portion will be higher, equity will go down. So try to buy more equity at that time. Market goes up, sell the equity and buy more bonds or fixed income with this money. So that's the right way of doing it.
and also my take on retiring, meaning there are different stages of retirement, right? Like early
Correct.
part of the retirement, middle part, and later part. Like somebody suggested, said go years, slow go years, and no go years. Like
Correct.
in the early part of retirement, you're traveling, spending money, and so you need more cash, immediate cash access. In the middle phase, like a slow go, you're slowing down, you don't go as much, and no go, sometimes you might even require long-term care. So those are
Correct.
different stages of retirement as well.
That's
Right.
a good point you
So,
made.
okay.
Absolutely.
Yeah. Can USA print more money and wipe out the debt? That's a very
No, I mean
good
this
question. And
that
yeah,
increases it. That increases obviously. Dollar goes more down, so they're not producing anything. You just keep printing money.
right.
Yeah.
So the when you okay. So what about fixed indexed annuities and retirement planning? What is the
Yeah.
role
So
of fixed index retiring?
yeah,
Yeah.
so fixed index, what happened that that you buy it and there's a minimum guaranteed return they give it. If
Hmm.
you cannot tolerate the market volatility at all, I do understand that you want to buy some annuity, some fixed insurance. But again, my recommendation is that this annuity, the cost, I'm not okay with it. The surrender
Hmm.
charges, I'm not okay with it as a CFP. I believe
Hmm.
in buying low cost index product and leave it there and do it yourself. That's what I personally believe in. But if you cannot do the market volatility, this is where the insurance company comes in, make money. They take your money, invest somewhere else, and they make money.
Right.
So that's the trade-off here.
Right. All right. Do options help in keep losses down in the market?
Yeah.
It's a
So
good question because the
it's a
volatility is the key for I mean, like options, right? Whereas the stability is good for markets, stocks. Options are savvy in investment. Said covered calls and cash covered puts is the way he plays the market a little bit if he has free cash sitting in the brokerage account. And okay, please repeat the name of the book, Red Dalio book you said. You
principle.
mentioned principles.
Principle.
Yeah,
Yeah.
actually, he has a questionnaire. You can take that questionnaire and type your personality by where you stand in that Ray Dalio's principles questionnaire.
Yeah.
All right, Giant. Yeah, what percent gold? Why do you suggest? What do you suggest for gold?
Yeah, about
Uh,
5% of the portfolio, we do recommend some gold,
yeah.
and we suggest gold because it gives you a hedge and into the portfolio as a currency. Obviously, gold. Warren Buffett says, "I understand that gold doesn't produce anything. You should buy." He believes 100%, buying index. Obviously, if you and equities. But the thing is that
Right.
we're not Warren Buffett. You and have limited money.
Right.
That's what we should like listen to everyone and try to incorporate into a portfolio a broader vision. So my suggestion is buy some gold because it will give you a good hedge into the portfolio if the market drops. For example, this year gold is up, so it's a good
Right.
hedge. Up to 5% you can buy some gold.
Right. Actually, my understanding of Warren Buffett, he doesn't even buy stocks. He buys the whole companies or majority of the
Yeah,
companies. So
yeah,
he buys the whole damn company.
correct.
So he can manage it and, or at least put the managers who he can rely on. Okay, real estate prospect for next 2 years. What's your take on that?
Yeah, I really do like real estate. In my opinion, the Fed will cut the rate 2 times this year. And like my Gujarati clients, I always tell everyone there's a reason why they buy real estate is because of depreciation. So
Hmm.
I do believe that real estate market there'll be shortage of real estate coming into the market. And I do believe that the real estate market in the long run will go higher. We actually have a real estate developer, our president, right? So I do believe real estate market should go high in the long run, and
Yeah,
it's a good. We should not time real estate. We should buy and hold it. Try to buy some townhouse if you can. I really love the depreciation portion, and you can get to write this off from rental income, active, passive. A lot of ways you can do it. So yes, I do. I do like real estate investment for long term. Take a look at the cost and speak to your financial advisor. But for educational purpose, you can just take a look all of this.
right. What are your thoughts on crypto investing?
Yeah, crypto investing,
Bitcoin.
what happened, we're not allowed to talk about it. Our financial brokerage doesn't allow it.
Hmm.
But crypto is one of those thing that we're not allowed to speak about it at all, unfortunately.
Yeah, okay. Cryptos, I guess, are like something like gold investments in some of people's opinion.
Yeah.
Anyway, so what are your thoughts on QPRC? I don't know what that means, but do you have any idea?
I think the QPRC is the rate I'm just talking about. It's a Quest Patent Research Corporation. It's a particular stock they're talking about. I
Okay,
don't
okay,
think
forget it.
we're allowed
Yeah,
to talk about that.
yeah,
Yeah.
we can discuss individual stock.
Yeah.
So, are there any defense stocks in from Europe better option now? Defense, I don't know what the meaning of defense, like armed companies or like a defensive stocks. What? How do you
I think
read
they're
that
talking about
question?
defensive stock. I'm talking about from Euro better option now. So,
Mm,
so as I said, that you can take a look at Euro VGK. This ETF has all the good stock that you're looking for. Individual stock. That's something that we cannot talk in this like buying.
right,
You know, I don't know
right,
Nestle and everything. We cannot recommend.
right,
So take a look at the index fund if you're interested into it.
right. So, what is your opinion regarding deferred fixed annuity as pre-retirement? You kind of mentioned a little bit about
Yeah.
annuities, but another question
Yeah.
regarding that. Yeah.
Yeah, so tax deferred annuity, as I said, that annuity due to high cost, I'm not interested into it. I really do like when you sell it, you do have to pay taxes on the profit. It does, and so in my opinion, you should buy individual index funds for a long term. And when you sell it, you pay long term capital gain. That's a better approach.
Okay. What do you think about SPF 500?
Yeah, I think she's talking about index funds. Yes, yes, I
Okay.
do like it.
Not like a sunscreen SPF.
No, I don't think so. No.
I'm just kidding. So, what are
Yeah.
your thoughts on Roth conversion? I think you always suggested when the market is down is a good time to do Roth conversion. Are you getting a lot of calls on that,
Yeah,
Syed?
so this is a perfect, I think, question, and this is my slide. If you see it, what to do
Mm-hmm.
in the market. Number one thing I do recommend if the market drops again, not now, if it drops
Correct.
again, do a Roth conversion. Like,
Mm-hmm.
Tesla year to date is down 60%. I'm giving an example. And if you love
Mm-hmm.
Tesla stock and the money is in the pre-retirement account, try to convert Tesla in kind from the retirement account to a Roth IRA. It's called a Roth conversion, depending on your income bracket and your age and which state you live in. But
Mm-hmm.
I do like if the market drops, try to do some Roth conversion. Now, Tesla, I'm just giving it this example, goes back from pre-tax to post-tax. It goes back up tax-free. Again, very
Right.
powerful. When the market drops, do so. This
Okay.
market is also a good time to do a tax loss harvesting. Like if you have any stock which are down, sell it
Mm-hmm.
and carry forward the loss
Mm-hmm.
because the loss up to $3,000 you can get to write off from your W-2. This is a good time to do something called dollar cost average, like the ETF I spoke about. Sample
Mm-hmm.
of it, you can use it and keep buying more as the market drop. And also, Dr. Kohli, this is a good time to gift assets to
Yeah.
because remember this year, I think the estate tax exemption is going down from
Mm-hmm.
is expiring. So
Yeah.
if the market drop, your assets must be down right now. So try to gift those assets, and the asset becomes out of your state. And if it grows state tax free. So these are some of the things you can do in this down market.
Okay. Good. And again, there's some question about individual stocks. We'll skip that question.
Yeah.
Uh, do you suggest now is a good time to convert? I guess the same thing, 401 to Roth. You did discuss
Yes,
that just
I
now.
did.
And I'm currently in early 70s. Would it be wise to do a Roth conversion from IRA?
Yes,
That's
yes.
another question.
Yes, if the market is down, it is
Right,
because what happened at the age of 73, you have to take RMD. Roth
right,
IRAs, there's no RMD.
right,
So and market goes back up, it goes back up tax free. It's very important. I do like Roth conversion when the market drops.
right. Especially in a retiree, you might have a lower
Retirees.
income tax rate,
Correct.
and it's a good time. Yeah. But
Absolutely.
any suggestion for investing in real estate during this time? I think you already mentioned it's a good idea to
It's
be
a
in
good
real
idea.
estate.
Yes.
Yeah.
Yes.
And another question, what is the difference between Vanguard short bond, intermediate bond, and long-term bond funds, I
Yeah.
guess?
Yeah, so short-term bonds, as you know, that they are like 3 to 6 months.
Hmm.
Intermediate bonds are, a couple of years, and long-term is more than 10 years. And then what happens if the interest rate goes high? Long-term bonds fluctuate the most. Similarly,
Right.
interest rate goes down, long-term bonds fluctuates the most. But short-term,
Right.
mid-term, they don't fluctuate too much. So our recommendation is in this market, try to go for intermediate or long-term because interest rate most likely will drop.
Yeah, the next question is about the Ray Dalio's book. Yeah, it is the book name is Principles, not
Yes.
Perspective. Yeah.
Yes, I think I
Can I?
misspoke. Yes.
Yeah. Yeah. Can I buy IPO without a broker?
Yeah, yeah. Some custodian does it. I think I'm not familiar with it, but some custodian do allow you to. Yes, you can
I
buy
think if
pre-IPO
you have a lot of money with some brokerage or a
brokerage.
custodian, he might
Yeah.
get some IPOs allocated to him and he might sell it to you, right?
Yes.
But without a
Yes.
broker, I don't know. Unless you're working for that company, I don't
Yeah.
see how you can get it. Yeah. If
Sure.
I have pledged a gift to charity and usually donate appreciated stock, since the stock market is down, especially in the last 2 days, what will be the best way to give it? I think you mentioned about gift giving. You want to address that question again?
Yeah.
If
So
I
this question is a little tricky.
yeah,
That you pledge charity, but what happened? The stock market is down. So ideally you should do it when the market is up.
right,
But I do understand you pledged it. Hopefully you have some time.
right,
So if it's possible, speak to the person you're donating it. Can they wait a little bit? If
okay,
that particular stock goes back up, the value is
right,
more.
right,
So try to negotiate with that person, my suggestion, or just try to delay a little bit.
right. I think what happens a lot of time, for example, in charitable your account, once you transfer your stock, they have to sell it. They can't keep it as a stock. That is a problem, I think.
Correct. Correct.
Then, yeah. So, what about the dividend stocks? Talk about dividend stocks. That's where a lot of
Yes,
people are
so I think
focusing on.
yes, I think dividend is a good idea. Dividend paying like Pfizer, the stocks like this are good idea. You can take a look into Schwab dividend paying ETF.
Hmm.
So that also a good idea to take a look into it. But yes, dividend paying like Verizon, this kind of company pay good dividend. You can think about buying those. But again, I am
Hmm.
big component of buying index or ETFs. So you can take a look at the Schwab dividend paying ETF or something
Right.
similar.
Yeah. Again, I think Syed's general take is not by individual stocks, by the sector or the
Yes.
type of funds and ETFs. Yeah.
Correct.
Again,
Correct.
gold stocks. Name gold ETF. You want to name any gold ETFs?
Yeah, GLD, you can take a look at
Okay.
something similar. That should give you
Okay.
the, yeah.
Right. I think next question is about physical gold versus gold ETF. I would
Yeah, I would
suggest.
just buy the ETF, but physical gold, people do buy it. They melt it and do jewelries for, different reasons. But I do recommend, ETFs are fine. But remember, the physical gold buy sell, you have to pay the transaction fee 3%. So I'm not
Right.
sure if it's a good idea. Index funds, sectors Spider should be able to do it for you.
Yeah, the physical gold, you need to store it and you have to keep it safe, some
Correct.
lockers.
Correct.
And then when you
Correct.
sell it, you have to sell it to the right people and kind
Yeah.
of hassle. Yeah.
Yeah.
Okay, bond ETFs, I think you mentioned about bond ETFs. So
Correct.
what are your thoughts on the future of artificial intelligence, humanoid robotics, FSD, quantum computing?
Yeah, so artificial intelligence, obviously, that's the future. And this is what we are talking about. And then one of the question people ask that this trade war will it the tariff will it bring the job backs? I cannot. The unemployment rate, Dr. Kolli, is below 5%. And
Mhm.
like I'm from Dhaka, and then this shirt I'm wearing in the it says at the back made in Bangladesh. So I don't see that like this job is coming back. I cannot imagine that someone from Texas sewing my t-shirt there or
Mhm.
shirt there. So I don't think those kind of jobs are coming back. I think it's more of a tariff negotiation, but I think most of the jobs America will be AI related. So
Mhm.
anything a company using AI, I think it's a good to buy it, like AVGO company like this, Broadcom, or Nvidia. These are good. Have to have some into the portfolio. But the problem is you buy too many of this stock. That is the main issue. But
Right.
remember, as I spoke about, that Magnificent Seven is about 50% of the gain is coming from SPY through this Magnificent Seven. Is
Okay.
heavily weighted, so you don't have to buy the individual stock to do it. SPY is giving you the exposure that you need, I think.
Yeah, the lady doctor who put the question about QPRC explained what it is. It's qualified plan Roth conversion in a life insurance. That's what she was mentioning. Do you have any idea what
Yeah,
qualified
I
plan Roth conversion? Yeah.
Yeah, so qualified plan. So I'm not sure about in a life insurance what it means by that, but if you have a qualified plan, like through work, So that sometimes allow, Roth contribution or Roth conversion. You can speak to the administrator if it allows it. I'm just not sure
Mhm.
about in a life insurance what it means.
Okay. Okay.
Yeah.
What about bond laddering? Everybody's talking about bond laddering also these days.
Yeah.
Can you explain a little bit or just touch on that?
Yeah, so or T-bills or CD laddering, or
Mm-hmm.
T-bills laddering or bond laddering, I think is a good idea. You can buy, individual bonds as well. Like
Mm-hmm.
either buying mutual fund ETF, you can buy individual bonds as well. I think laddering does make sense to buy, 5 years bond or corporate bond. I think laddering does make sense to do it if you don't need the money for 2 years. I think up to 2 years I'm okay. So you can go for 2 years, you can go to 1 year, you can go to 6 months. It's quite common to do laddering in CDs, T-bills into bonds. Yes,
Okay.
for
Uh,
retirees.
okay. Right. Right. Can you explain if Fed decreases the rate, how does that change the gold and gold miners? Do you have any idea how rate and gold investment correlate?
Yeah. Yeah, so if Fed decrease the rate, so what happened? Most likely, what it means the inflation is in the control. Gold at that time may not move higher. Gold and
Mhm.
silver, copper tends to go higher when there's a inflation comes into play.
Right.
But gold, the main reason you're buying is not necessarily only for inflation. You're mainly buying it as a hedge if the market drops that actually give you the cushion. That's the reason you buy it, not always about inflation. So
Okay.
yes, if the Fed decrease the rate, if inflation completely in control, and if a deflation happen, gold price may drop. That's the risk into it.
Right. Usually the gold is a hedge for inflation. So when the
Correct.
inflation is down, gold also. Yeah.
Correct.
So buying a townhouse as a real estate investment is equivalent to REIT. Is that what you suggest? Or do
No,
you sub?
I suggest hard asset.
Yeah.
Really, really, you buy. That's what I always advocate, and I want the depreciation and everything. The REIT, I think
Right.
the advantage of REIT is that there's no headache. If
Mm-hmm.
someone academic like you, Dr. Kohli, maybe read,
Mm-hmm.
but I have clients who are businessmen. If you can take some risk and if you have some time, you
Right.
can go for buying individual houses, townhouses, because I want the
Right.
depreciation that really, really lower down your income.
Right. Yeah. If somebody who wants to get their hands dirty and go to the site and manage it, rent it out and advertise and fix it, or have a management company do it. Again, depends on the location. I would
Correct.
suggest.
Correct.
Okay, 529 plans make sense while the market is down. That is the last question today.
Absolutely. Yes,
Mhm.
absolutely. It does make sense if the market is down. Not today. If the market
Right.
goes down significantly again, like yesterday, if you have children, grandchildren, 5 to 9, try to preload it. 401k, try to preload it because
Mhm.
eventually the more market goes down, the better is the buying opportunity. In the long run, market always goes higher. And 5 to 9, you can get state tax deduction as well in some state. Absolutely.
Right. 529 is a long-term investment for your
Investment.
children's
Correct.
education, grandchildren's education. I think we covered most of the question, almost all the questions that are posted here. Do you have any parting thoughts, any suggestions about how to calm your nerves during these volatile times and uh,
Yes.
and not
Yeah.
be too caught up in everything? Yeah.
Yes, I would just again say to the API member, whatever I say usually is very boring, but we just want to remind everything. Make sure you don't buy concentrated position, don't use margin, try not to time the market in this market. If you are concentrated, Dr. Kohli, one option could be when the market goes back up, reassess your situation, maybe sell it and diversify it, and make sure that have patience, don't panic. If everyone is Dr. Kohli, if you're down, I'm down, everyone is down.
Mhm.
Don't worry. We're all
Yeah.
down together.
Yeah.
But what should not happen that market is up, you are down. That's a problem.
That is the problem.
So if everyone is down, people figure out a way. But long-term market always go higher. And
Yeah.
I just want to finish with the chart. If you take a look at,
Yeah.
for the last 1990, even with all this ups and down, the net result, the market is up S&P.
Right.
Whenever you invest into the market, you should be able to have some risk tolerance. Just to stay invested, stay diversified. In the long run, market always goes higher. Don't do panic selling in this market.
I totally agree with you, Syed. Investment should be boring. It should not be an exciting sport or a
Correct.
gambling or entertainment. It should be like paint drying on the wall rather than trying to fix everything every day. I agree
Absolutely.
totally with the concept. Investing is a boring sport, not a entertainment uh, s- place.
A-
Anyway, thank you
Absolutely.
again. I really appreciate your kind and sage advice to all our RAPI members. I think you calmed a lot of nerves and educated a lot of people today again. And we look forward to your further webinars either the next few months or also during our convention that's coming up in Cincinnati at the end of July. We hope to see you, Syed, as well as all our members there, and we'll have a great time again.
Thank you, Dr. Kohli, for the thankless job you do for API. From my side, very really appreciate it. Thank you very much.
My pleasure. Thank you, Syed. Thank you,
Thank
all the
you.
audience, for being here and asking all those very interesting questions. It's both a learning experience as well as a good kind of a therapeutic experience for some of us who are down, all of us in the same boat again. But we look forward to seeing you all in next seminar and webinar. Thank you. Have a good day.
Absolutely. Thank you. Have a good day. Bye bye.